Awesome. Well, we're at about 6:12 here in Idaho. So especially for all of you East Coasters, it's much later for you. So we'll get started on this. I definitely don't want to take too much of your time. But again, for anybody just joining, we are based in Boise, Idaho. I am Sarah Lett, so I'm on the left of your screen there. Does everybody see that where it says first time home buying class there? Perfect. Okay, I see head nodding. So again, we're out of Idaho. So don't be alarmed of why in the world am I in an Idaho class? We don't know either, but it's okay because we're all going to be here together and we're going to learn something. And like I said, Chris is licensed in all 50 states to help you with any kind of lending questions. So regardless of if you're in Virginia, Georgia, Florida, Alaska, or Idaho, we're here to help. And same with me, even though I'm only licensed in Idaho for real estate, we're part of Keller Williams, and we're a worldwide company. So I can easily help interview and get you in contact with a fantastic agent that's near you, that's just as educated and ready to go to help you as we are. So let's get going on this. So what we're going to discuss tonight is just meeting the team, benefits of home ownership, looking at what the current market is going on, because that's a huge question. Just before everybody started getting on tonight, Chris was just letting me know about some big changes that happened even just today. So it's an ever evolving market. We're going to quickly talk about the buying process, financing 101, shopping for your house, and then open it up to questions at the end. And also just a reminder, always feel free to just interrupt, raise your hand, or just put a question in the chat box. And we'll stop what we're doing and answer that question for you. All right, so here we are again. That's me on the left. Dressed up a little bit nicer and not in my husband's Star Wars office. And then Chris on the right there. All right, again, not in Idaho, don't worry, we got you covered. And there's a little teaser of what Boise looks like in the evenings because it's absolutely beautiful. So this is my team. Van is our lead agent. He's been in the business for about 23 years. Prior to that, he was in the Navy as a military officer. And then his wife is his co-owner and business partner. And she's a boss babe. She helps run our brokerage in Boise, Idaho, as well as 16 other offices in the LA region of California. So she's amazing. Then there's myself. I was in the Air Force for 6 years before doing lots of different things and then coming into real estate. I've been here for 9 years now. And then we've got Pat, another Sarah, and then Kylie, our operations manager. And then here is Chris's team.
So this is my team. So I'm actually someone the same as Van and Stacy. My wife is the branch manager, and we've been working together for just shy of a decade, but both in the business longer. We have a team that consists of a first responder firefighter. That's Glenn. Jason Friend on the far left there is someone that we lean on as more of an operations manager here locally as well. We have a reverse mortgage specialist for anybody looking that's 62 years or older. She's been teaching classes for over 20 years and actually did the reverse mortgage for my mother. Very trustworthy. We have a Spanish-speaking LO, and then we have just another rock star LO named Nikki, who has recently come on board. And this is just shy of a few more people that we're adding here sooner rather than later, but great team to work with.
So needless to say, it's not just one person trying to do a million things on either side. We have amazing people that help us do everything, so nothing is dropped. So obviously, benefits of home ownership. Why are we even here? Why is this a big deal? Long-term investment growth as your equity builds, appreciation of your property over time, pride of home ownership and stability. You've got tax benefits. It builds your credit history. And I think especially for first-time home buyers, this is a huge one, is you have fixed monthly payments, unlike rent, where a landlord can raise it at any time, let alone give you an eviction notice of, we need you out, which is so unstable and stressful. If you have ever read Rich Dad, Poor Dad, Robert Kiyosaki, great quote here by him. Real estate investing, even on a very small scale, remains a tried and true means of building an individual's cash flow and wealth. Some of the most wealthy people in our country and the world get so much of their funds from real estate investing. If anybody is a numbers nerd, let's talk stats. So in 2023, Consumer Housing Trends reports finds that first-time home buyers, and sometimes, correct me if I'm wrong, Chris, but technically first-time home buyers are even considered people who haven't purchased in quite a few years. So even though you purchased a long time ago, in modern lending terms for like the first-time home buyer programs, this doesn't have to be your first home. It's just you haven't bought in a while.
Usually a 3-year length period of time of not owning a property. So after 3 years, you're considered a first-time home buyer again.
Awesome. So for that first-time home buyer bracket right now is now making up 50% of all of the current buyers in the market, which is up from 45% last year and then 37% in 2021. So it's been consistently going up. So that's either people that have been saving for a long time and they're finally ready to do it, or people that, again, haven't bought one for over 3 years and they're wanting to jump back in the market. So the share of first-time home buyers likely hasn't been this high since around 2010 when there was a first-time home buyer tax credit. So 50% now, then previously 45, and then before that, 37%. The average net worth of a homeowner is 40 times greater than that of a renter. So it's massive. So this is going to be a fairly broad statement for the whole nation about the current market. And then later on, we're going to get into, Chris is going to talk about like what current interest rates are and all the different programs going into that. And then I'll kind of talk about our micro market here. And then for everybody that's outside of Idaho, again, I can easily get you in touch with a local agent that's near you to talk about your micro market and exactly what's going on there. So homes across the nation are on the market longer recently, allowing buyers to negotiate concessions to cover closing costs. So remember, just a few years ago, back in COVID times, there was just so few houses on the market, but a ton of buyers. So what you could have bought for $400,000, there were so many people competing for the same house that it ended up getting bid up to sometimes over $100,000 than what it was originally listed for. At least that's what was going on here in Idaho, but I know it was fairly universal across the country. So people were just competing. They were having to waive home inspections. They weren't being able to ask for closing cost assistance. It was just the absolute Wild West. Now we have more houses on the market, but less buyers because of the higher interest rates. But buyers that are in the market are being able to negotiate so much more because the listings have been on the market for, many more days on the market, which allows for a buyer to come in and offer, okay, let's start at like $25,000 under list price and see where we can negotiate this. Oh, and by the way, we'd like to ask for $10,000 to go towards closing costs or to get a 2-1 buy down, which Chris can talk about later. So there's so many more options and negotiations that can happen now. There are permanent and temporary rate buy downs that can save hundreds of dollars per month on monthly payments. A savvy realtor like us and Chris, the lender, can help you negotiate a seller buy down strategy for your interest rate, as well as help you navigate through different strategies if the days on market increase and inventory starts to increase.
And I'll just mention before we go to the next slide is that, and India might know this as well, it's really important for first home buyers understanding that The realtor and the lender are a cohesive team, and they work together to make sure that you understand all your options so that you can make the best financial decision for you and your family. If you don't ever feel that way, it's not the right team. But Sarah and I, when we work on with buyers together, we know from the very beginning, from day one, where we're at in the pre-approval process to loan options and things like that, because we have to know how to be able to act and negotiate deals. So as we go off after we're done with this, just know that you should feel like you're being very well taken care of by a team of people and not the go-between between your real estate agent and your mortgage person. We'll talk more about that later.
Yes, perfect. So again, this is based off of Idaho numbers, but this is an amazing infographic that I think can be, you know, fairly similar across the whole nation for kind of what's going on in the market. And regardless of where you're at, again, I can help connect you to an agent. If you are not working with an agent that has this kind of information easily on hand to be able to go over with you, then, you know, you might need to move on. But I'm sure India has just as much amazing information as this. Sometimes maybe in a different format. This is from our local brokerage that helps compile this information on a monthly basis. So I'm just going to quickly run through some of this since I don't think anybody here is actually from Idaho. So I'll just run through this. This is for Ada County, which is the largest county in our little valley here. So that encompasses Boise and a couple outlying towns. So what this gives us is a really great snapshot of what is going on in each price range of our valley. So if you can see my cursor here, can anybody see that? Okay, perfect. So in each price range, we can see in the month of October, because we were always kind of like in the rears a little bit with the information. Let's say, for instance, between the price ranges of 500,000 to 599, there was 137 active homes on the market. And during that month also, we had 70 go pending and 944 close from the beginning of the year to October. So what that shows us in this column here for inventory is we only have 1.7 months of inventory. So the economists say that a balanced market is anywhere between 5 to 6 months worth of inventory. Anything over that is what we would call a buyer's market. So clearly, Idaho is still very much a seller's market in this price range. So what that means, the 1.7 months, is if everything stopped and we didn't have any other listings come on the market, then those 137 homes, they would all be under contract and pending within a month and a half. So that's very quick, very quickly. So of the original list price to actual sold price, our sellers in this price range are getting about 98.7% of the list price that they're asking for. So there's not too much room of negotiations going on there. And then average square footage is about 2,000 square feet. Price per square foot is about 260. And then our average continuous days on market is about 45 days. But sometimes some of these can totally misconstrue these numbers. Like if it's, let's say, for instance, a listing where, you know, agent is suggesting, you know, you should probably list at 500,000, but the seller wants to list at 560 and it's dirty or like a bad corner or something, and it's just been sitting on the market. Those can definitely misconstrue those numbers. We personally, like for instance, on our team, we just recently had a listing that was about 2,000 square feet around this price range. We listed it on a Thursday, and by Sunday we had 2 open houses, a whole bunch of showings, and accepted a full price offer. So if they're marketed correctly, they are still going quickly. So that's just a quick snapshot of kind of what's going on in the price ranges. These infographics are also amazing because it also shows on the left-hand side of the screen in the red bar graph, it shows from 2023 back to 2014. And it shows if you were a buyer back in 2014 and you jumped in the market and purchased a home at that time, look how much the value of your home has appreciated in just a few years. It's exponential. So the average went from 221 and now our average is 609. So Idaho specifically had a massive equity increase in our area. Before I jump to the next one, Chris, did you want to say anything about this?
I would say, that if I'm a first time home buyer, if I'm looking at this information, I might question, well, how does that continue to grow? One of the things that we've had is a little bit of a correction in the last 18 months, but because of where inventory is at, not only here in our valley, but across America, we're well under supplying the market with over 1 million homes short every year. So what we're seeing is an average in our valley for every zip code, which includes about 7 different counties, an average of about 5% appreciation projected in the next year, but an average of almost 10% appreciation for the last 10 years. So even if we have some negative moves and just even say this equity growth levels off for a while, appreciation still safely at 4%, which that's where that 40 times greater as a homeowner than a renter comes into play, because that's where a lot of that equity grows. So because of inventory, equity is going to continue to grow safely at a reasonable rate.
Perfect. I'm going to jump this next one because it's just a different county and showed slightly different numbers. This is a fantastic model discussing affordability and how it's just fluctuated and changes over time. Baseline is 27% affordability. And as of 2023, we're just barely past that at 29%. So while the media talks about everything being so unaffordable, we're just barely different from what our baseline is. Chris, anything on this one?
No, it's just a good graph that shows, we'll talk maybe a little bit about it later, but when most borrowers sit down, whether you're first time or second time borrower, we're worried about the monthly payment and not what the rate is. And depending on your loan amount, rate doesn't make a giant difference in payment. It's a different discussion for people in my age group that may want to hold on a house for 15 years. But this is a really good sign that our market's correcting in a way that's appropriate for affordability for everyone.
Beautiful. Same thing here, looking at the curvature of just projections over time. We're truly not again, it's just some misconception of hearing everything in the media of, well, there's just the market's crashing and it's just this massive difference in change. We're only 7% above what the projected average was going to be for home prices. So it's still fantastic as far as home prices and just the incline over time. Chris?
No comment. It's a good one.
I'm going to let you run with this one then.
Okay. So mortgage rates. So one of the things that with my clients that I consult with is a lot around this conversation when we're talking about how much rate makes a difference in your payment. So this does a trend of a historical average showing that on average, I think so 1972 to 23, average interest rate during that period of time is 7.81%. The last 30 years, it was 5.97%, and we're sitting at around 6.60% as an average. So we're kind of in a sweet spot, leading to the fact that when rates were in the threes, we were all very spoiled. It was very much an anomaly. And I can foresee, once I get my crystal ball out, I could see rates stabilizing somewhere in the, maybe the 6 range over the next couple of years. And that's what we might see for a considerable amount of time, because that seems to follow a historical balance. So we've worked away from highs and lows, but we're really right in a sweet spot where, we can see in 2008 rates were a little bit lower. So I would say that between 2008 and 23, that helped bring that average down a little bit. But it's just good to see historical averages do a little bit of projection for us, because those averages can be trusted from the data.
Fantastic. Why don't you also talk about where interest rates are at today?
Good. So interest rates, depending on borrower profile, they're going to be somewhere between, I would say, mid 7s and lower. Market's volatile all the time. It goes up and down depending on what, the Fed and Reserve say. So that's where we work with, what's a comfortable monthly payment for you. And then we back into what that makes your purchase price range look like. It's had a bettering trend over the last 2 or 3 weeks. It's going to be a slow grind to get down back into that 6% range. And it might take a year to 18 months to do that. But that's the opportunity for buyers right now is, although we are short on inventory, there are still purchase price ranges where you would rather make it a full offer price today, maybe with some seller concessions to buy your rate down to a more comfortable rate and payment. Because in the next year, even with 5% appreciation, what we're going to find, and we've already seen it in several cases, you're paying more for that house next year. Even if your rate's 0.75% or 1% lower, you're going to see your monthly payment not change in a way that's going to make, a life-changing payment amount, meaning it may only change by $60 or $70 a month at that point. So now's a good time to do it because your appreciation will continue to grow on your home, and we have the ability to buy down rates right now. So it's still a good time in our market. Now, it may be different in different locales, but that's where rates are at today. They're looking better.
For a fun little bit of data that was eye-opening that I saw the other day, it said in 1971, which I think you can see a little bit on here, interest rates were 7.3%. So pretty similar to where we currently are. Mm-hmm. If you would have waited as a buyer, if you would have waited for interest rates to come back down, it took 22 years for them to come back down. So it took until 1993 for interest rates to finally come back down to that. In that amount of time, home prices went up by 500%. So it's insane. Like, the data is just unreal. Okay, let's jump to the next one. So this is a great infographic again of kind of what it looks like to go through the buying process. So much of this process, it goes very much hand in hand to what, like, say for instance, myself and a buyer would be going out and doing and looking at houses physically, while then hand in hand what Chris and his team would be doing behind the scenes. So again, you're going to find an amazing agent that makes you feel comfortable, that they're knowledgeable, that they're going to do anything it takes to make you successful. They're going to go over your needs, your wants. Is there a specific school district you need to be in? Safety wise, your commute to work, different little details in your house that you want. Then you also need to be at the same time meeting with an amazing lender like Chris. And he's going to be going through the process of giving you a pre-approval. So do you want to talk about that?
Yep. So I'll give the high level because it's not fun because I don't have the houses to show everybody. So once you've met with a realtor, and it does work in reverse, sometimes people will meet with lenders first. It doesn't necessarily matter because we're all working together as a team. And I would introduce, my clients to Sarah and her team as well, because I trust and know that they're going to make sure that client first. So there are 3 to 4 major things that we look at when we're a lender. And we look at your job history, credit, income, and assets. It sounds scary, but it's very simple. It's how much you're getting paid. We want to see your credit to make sure your credit is going to fit within guidelines and rules. And then we want to make sure that you have some money in savings. However, there are programs out there for first-time home buyers with a good credit profile, a good job. You don't need assets to qualify. So those are all the things that we work through in the beginning as part of our pre-approval process. And there's a difference, and we'll talk about this later. A pre-approval is when somebody has sat down with you and said, okay, what are your goals? Where do you want your monthly payment to be? I need your pay stubs, W-2s, taxes, bank statements, and I need to pull your credit, see where you're at. And then based upon those parameters, we issue what's called a pre-approval. And that is the trigger for Sarah and her team to go out and confidently start looking at homes and making offers at that point. So it can take anywhere from 24 hours to 3 or 4 days, depending on a lot of different factors, but we make it as painless as possible. And it's actually a good process to go through with our clients. So it helps them plan financially as well, because we get to see your whole financial profile. And so we kind of sometimes go beyond just getting you pre-approved, and it's how to manage your budget and things like that to make you more successful as a homeowner as well. And so after that, I say, Sarah, here's our purchase price range, go shopping. And then Sarah takes back over.
Yep. And then from there, and again, from our point of view as agents, why we want so badly for you to have everything already processed through with an amazing lender is the last thing we would ever want to do is take you out house shopping and you find something that you just fall head over heels in love with. You are so mentally committed to that property. And then Chris sends word of, I'm so sorry, but unfortunately you're only approved for down here and that house is no longer an option. Then you're starting off that home shopping process, just defeated feeling. But again, with a great agent, a great lender, we're still going to be able to find you something that fits all of those parameters of what you're looking for within your budget. So you're not going house poor. That's one of the biggest things that we're really specific about, is really looking at those finances to make sure that this is a comfortable process for you. And that within a few months of living there, you're not going to be like, I can't afford this. So once you found a home, we get it negotiated, we get you under contract, we're doing a home inspection, negotiating repairs if it needs anything. Generally, if it's a brand new home, you're not going to need anything. Once we're through inspections, Chris is doing a ton of stuff behind the scenes with underwriter teams and so much more. We're working with the title side, making sure everything has a clear title. And then we get to celebrate you at the closing table. You're signing your documents, might have to limber up your hands a little bit from signing so many documents, but it's worth it in the end. And then you're a new homeowner. I think what's really cool that we might want to talk about too, maybe in another slide, is how sometimes buyers can go almost up to 2 months without having their first home payment due. So that's a really cool option to have sometimes, is with the prorations and stuff. You might close in June, but your first payment isn't even due until August or later. So that's a really cool thing to have too. So let's move forward here. Chris, is this something that you probably already talked about, looking at credit, employment, FICO score, all of that?
Yep. This does a better job than me rambling, but simply the core pieces are credit, income, job, make sure all the lenders and guidelines, we all follow the standard set of rules. And so we have to make sure that if someone's going to lend you $300,000 to live in a home, that you can make those payments. So really trying to satisfy some very basic things. And sometimes, depending on the borrower, sometimes that's difficult to do, but we always figure out a way to do it.
And not to mention, even if you just started a new job, sometimes Chris can even just accept, like, let's say you just started a new job, but you're really needing to get into a new house. Chris can even, instead of like old payments, paychecks, pay stubs, he can just use like an offer letter from your new company. So if you haven't even been there more than, a couple days, that's okay. He has tons of options to help cover those too.
I like to kind of give the analogy that there's this lending road, and every pothole is a different like lending option. So it's my job to narrow down how we can make things work and set the table appropriately. So, for example, we have a lot of nurses move to Idaho, and so right out of school, so they don't have any job history as being a nurse. However, we can use their school history as part of their experience. And then we use the offer letter from one of our local major medical centers to establish that this is what they're going to be paid. And we can use their schooling as job history. So it's not black and white on so many things in lending. So that's why it's always good to ask as many questions as possible. It's a good point. Thanks, Sarah.
Thank you. Okay, so here's where we can dive into the difference between pre-qual and pre-approval types of loans and so on. And we're at 643.
Okay, I'll move quick. So big difference between a pre-qualification and a pre-approval. A pre-qualification is you hop online and you fill out a loan application and you provide what you think is the right income, what you think the right purchase price is for you, some job information, and the algorithm and system spits out a pre-qualification. Most agents that are responsible won't take those kinds of things because you haven't sat down or talked to somebody on the phone about what type of job you have. Is this your gross income or net income? Are you self-employed? Are you working as a W-2 employee? Is it seasonal? Bunch of different things. The pre-approval is where we've gone above and beyond and actually got information from your employer. We have actual pay stubs from you. We understand what kind of job you have to make sure that it's fitting within all the guidelines that'll help you approve for the loan and run you through what's an automated underwriting system that all lenders use. And we issue that pre-approval. So there's a big difference. Types of loans, I would say there's three major buckets. There's a conventional loan, FHA loan, and there's VA loan bucket. FHA and VA are government-sponsored loans, which means they're guaranteed by the federal government. It's neither here nor there. And then the conventional loans are an alternative lending to the FHA and VA and some other loan types as just different ways to finance. There's not bad, good, or indifferent about any of them. It's all going to depend on what they mean to you and how you qualify for them. And that's where you get to make the decision of which loan type is the best for you based upon feedback and really the financing numbers. We can do construction loans, fixed rate, adjustable rates, all kinds of different loan types. So there's always going to be an option. So credit scores, lowest credit score, we would like to have everybody have a 620 or higher. And the reason for that is it allows us to work with first-time home buyers and our housing entity, which every state has. So New York, Virginia, they all have a state housing authority that is dedicated to making sure they get as many first-time home buyers into homes as possible. And they usually have a lower credit threshold for borrowers, but that's where we would like to start. Next slide. Closing costs. So closing costs are so as a buyer, you're responsible for a down payment, and that can be anywhere from 0 to 5%. It does not have to be 20% down. I still am amazed today about how many borrowers think they have to have 20 or 25% down to get a loan. You don't. Closing costs as a percent of your loan include things like appraisal fees, lender fees, title fees, escrow fees, and things like that. So that's kind of an average cost. And I just mentioned all those things without even having to read it, but
good job.
Prepaid interest is, Sarah alluded to this earlier. So when we fund a loan, we're funding the loan with prepaid interest looking forward, meaning if we were to close on a loan in January, our first payment wouldn't be due until March 1st because we're prepaying the interest for that current month. So what we'd like to do, if it's all possible, is we'd like to have people close at the beginning of the month because that allows people that may be renting or moving from another property, it allows them some breathing room between their last rental payment or mortgage payment and their new payment, and helps them fund moving expenses and things like that.
I know personally that was like a godsend the first time I bought a house. I was
Yep.
like, I could just save so much money.
Very exciting. Like a little Christmas gift.
Exactly. Yeah, let's talk about PMI.
Okay, so primary mortgage insurance, or monthly mortgage insurance is what we typically refer to it as, is in exchange for not having 20 to 25% down. What the government did was basically say, hey, how do we get more people in homes? It's really hard to save, 20% down on a purchase. And so it created really an industry called the private mortgage insurance industry. So what they do is every time you make a monthly payment, part of your payment goes into a mortgage insurance company fund that basically protects the investors. So whether it's an FHA, VA, or conventional loan, it protects those investors when people default, because life happens. If you foreclose on a property, you're paying into this mortgage insurance pool to protect and make sure that the whole lending industry doesn't fall apart if there were a lot of losses like we saw in 2008. So the benefit and advantage to us that don't have that 20% down is we will pay some kind of monthly payment towards this mortgage insurance premium. However, it allows us to start our equity growth in getting into real estate, which, if you're a home buyer and it's your first home, you're now a real estate investor. It doesn't mean that you have to have another property, and mortgage insurance has helped us do that. So it was really a big game changer.
Let's talk about quickly how they can get rid of PMI.
Oh, so primary mortgages, so the mortgage insurance will drop after a designated period of time on different loan types. So usually after about 10 years, it'll drop off by itself, or as your equity grows and you make your payments, you're also making payments towards principal. So eventually, as your value grows and you're making these payments, it could come off sooner with the right combination of equity and growth in the market for value, but is how much also you're making on your payments. So once you get to 80% of what we call loan to value, which is market value as it's calculated against your loan amount, then you can request to have it removed. So for a lot of people in the last 3 or 4 years, they probably got out of mortgage insurance about 5 years early, which is always great because that frees up some spending cash to pay other bills off for borrowers.
Yeah. Beautiful. Okay. Now you've got a few minutes to fly through some of your incredible first-time homebuyer programs.
So Keller Home Loans has done a really good job falling in line with making sure, how do we get people into loans? And so one of the programs they developed is Zero Plus. And what that does is it waives lender fees. It allows borrowers to actually get some funds paid by the lender towards closing costs. So I won't go into too much detail, but it works across all loan types. It could be the good fit for people. Some people it's not. So that's one of the programs. I'll let you scroll forward.
Yep. Next one, first responders.
This is a great one because anybody, like, lots of respect for firemen, first responders, EMS, police. This allows them to actually get a little bit more money back towards their closing costs. So if we're not able to negotiate concessions from the seller, we'll give quite a bit of money back towards that. And we also do, again, reduce the lender fees.
Okay.
And VA loans. So one of the things that is really important, not only to myself, but Sarah as well. My son's in the Army and my father was in the Air Force, is VA loans. It's a zero down loan program from the federal government. What we've done is we've also made sure that there's no lender fees on this loan. So we waive all lender fees and we make sure that the VA borrower has as much opportunity with some well-earned benefits to get into that home.
Okay.
That's
we
me.
are approaching the end of this. Here it's 6:52. Some people jumped on here kind of halfway through. So I just want to reiterate again, yes, Chris and I are based in Boise, Idaho. So I had explained earlier, if you have no idea how you got on this class, if you're on the East Coast, we don't either. We put it on Facebook for it to be like around Idaho people. But we're so glad you're here. We hope that you can get some kind of value out of this. So I'm going to put up, this is Chris's contact information. Again, Chris is licensed in all of the United States. So regardless of where you're at in the United States, Chris can help you. And then I'm going to switch here in a second to my contact information. It's actually going to have my business partner's face on it, but all of my information is the same on there. So again, this is information for Chris, so he can help answer any kind of lending questions that might even come up for you in the future. He's always a resource for you. And then as far as the real estate side, this is our side. I lied. We changed the picture. So that is me. Again, this is the real estate side of things. So again, I'm at Front Porch Properties. That's our little team name. And we are with Keller Williams. Keller Williams is worldwide and of course nationwide. So if you are needing an agent near you, please let me go ahead and reach out and find somebody for you. And except India is in Georgia. So there's your Georgia agent right there. And then we'll help interview agents for you, make sure that they have all the accolades and everything that you are needing, so you are set and taken care of in your buying process. So after that, then we just want to open it up to any and all questions that you have. We recently had questions about farming, so literally any kind of questions. So feel free to unmute yourself and ask, or throw it in the chat box. We are here for you.